Look, I hear you. You'd be surprised that I actually see pretty much all the comments on the YouTube channel and do my best to respond to every comment. Unless, of course, you're being nasty, then I'm not going to respond to you. But in today's video, we're going to be responding to a recent comment about the property market, about timing, about interest rates, and about how to get the most out of your investments. So I hope you enjoy my thoughts, and let's dive into it. I really enjoy watching your channel. You have a nice personal style. While I know timing the market is pretty tough, you and your wife seem to have perhaps inadvertently timed the market perfectly by jumping in at the start of COVID when interest rates went to record lows. And the market was still as hot as it eventually got. And of course, doing a lot of hard work yourself, of course. I'm wondering, do you think you could still have acquired so much property in the current interest rate environment? Have you ever modeled out if you could have gotten this far along the property journey if you had started from today? How would you have today's interest rate environment changed your approach where it presumably much harder to take on more debt? Would be really interesting to hear your answer. Essentially, summarizing that, it sounds like it was easier for us back in 2018 than it is today in a different environment. And that's all I think it is. I think we go through changing cycles of easy credit and difficult credit, back into easy credit and difficult credit again. And the property market is on a long upward trend over the long term, but it does have its peaks and troughs. And because the market has its peaks and troughs, I do think you can time the property market. But this doesn't mean I would stall. Generally, I'm quite progressive in our investing journey. So let me talk you what I would do differently if I was starting from scratch again today. As far as I see it, interest rates are sitting somewhere between 5 and 6.5% for the average Australian looking to purchase an investment property. This means you need a higher interest rate or a high yielding property to get a return on your cash flow to avoid a negative cash flow situation or a neutral cash flow situation. Because even if you're getting a gross yield of say 6% and your interest rate is 6%, you have a lot of other expenses you need to account for when buying property. Obviously, you'll have the upfront expenses, which are tied to the capital cost, but your ongoing expenditure of rates, water bills, property management, insurance, there's a whole bunch of other fees you need to account for. So with these higher interest rates, I would probably be chasing higher yield properties to build momentum in my property portfolio and also look at the value add strategies that Emily and I have done in the past. And will continue to do, to be fair. So winding myself back to 2018 when we bought our first property, we had a $66,000 deposit. Now, in the current environment, that would not get us an $800,000 property. It would probably buy us a $600,000 or $500,000 property. Now, I'd be looking for, say, a $500K property that has quite a high yield with the ability to add a granny flat or have an upstairs, downstairs letting situation with legal dual occupancy. I would want the property to yield for about $550 to $600 a week, and I want to be able to add value to the property by renovating it to create equity and then refinance. The big thing here is your day job income really makes a difference to your serviceability. So you can't compare my situation to Dara's situation in this example or somebody else's situation. Everyone is different and it's going to be dependent on your day job income in terms of how much debt you can access. Even if I could access a lot of debt and I was on, say, a $100,000 salary going through this situation, I would probably use all of that debt and get myself into the market, but I would be focusing on those high yield plays with growth potential and value add potential to tick all those boxes. That's really how you fast track this property investing journey. Some hard work, some strategic decisions, and also trying to time the market. Australia's market has pulled back and softened in 2023. So I'd be looking at both the short, the mid, and the long-term fundamentals of the locations I'm narrowing in on. Now, I run a Brisbane-based buyers agency, so you've got to take everything I say with a grain of salt because we are focused on the Southeast Queensland market. But I do see opportunities at the $400 to $600K price point for both cash flow and growth potential, both in the short and the long term. Now, I wholeheartedly admit that there's a whole bunch of other potential locations to buy in Australia. Brisbane and Southeast Queensland is not the only spot. Now, if you're looking to buy in this market and you want our help as buyers agents, we can absolutely do that. But I'm going to be honest in saying that there is other locations in Australia that you could potentially put your money. I would be looking at major regional towns that have fundamental drivers for growth and that have populations of at least 60,000, but ideally 100,000 people plus. Because when you've got that type of volume in terms of population, you've got a more diverse economy generally. You'll have more than just a mining sector. You'll have multiple sectors typically. You might have farming, you might have health, you might have tech, you might have finance. There's a whole range of sectors when you get such a large pool of people. And that's one of the reasons Emily and I put $1.4 million in the COFs market. Now that property has continued to grow and is probably valued around 1.6 to 1.8 million, depending on the valuation and depending on the day. But we're not buying those properties now for valuations. We bought that property for cash flow. So when we're looking at those major regional centers for ourselves in terms of our current portfolio, we are focused on cash flow and the ability to manufacture and add value. Now, one of the other things I'm very interested in personally is short-term rentals like Airbnb or motels. That's where I want to go to in the next 5 to 10 years. So I can see myself buying a couple of motels or starting off with at least one and getting involved in that short-term accommodation business. That's essentially moving into the commercial space with even higher yields, which you could definitely spin off larger cash flows in a higher interest rate environment. Now, this is probably a gripe a lot of people had. Everyone's had it easier than we've had, Luke. If you're in the current generation, you would say the boomers have had it easier, or the Gen Xers have had it easier than us. This is the toughest property market Australia has ever seen. And you could look at it that way, but I'm more of a glass half full guy. I like to see the positives of the world we live in. You have access to these videos, you have access to the internet, and you have access to pay for services if you want them. I've even said in past videos, of course, lots of people aren't going to use my services in the Brisbane buyers agency. You might choose not to buy in Brisbane. You might be well off. You might be saving at this point in time. You might be growing your day job income, but you can upskill and you can get access to different opportunities that previous generations or previous people didn't have access to. So in the environment we live in, one thing that I would do differently if I was starting again from scratch is educate myself. Now, you can fast track that by paying for resources and getting yourself there a little bit quicker. But if you want to take the time, pull apart property forums, pull apart books, pull apart podcasts, YouTube videos, then that's a great way to upskill yourself slowly over time. Now, even though I have my hand in buying property professionally, I'm always listening out to what the market is doing, what other buyers agents, what other businesses, what other real estate agencies are doing in the market to keep my finger on the pulse and see what others are doing. I wouldn't ever want to be proud enough to say I know everything that's going on in the market. I'm 100% confident and I act with a surety in everything. If anyone gives you guarantees, they're obviously not doing the right thing because there's no guarantees in this life. So if you are starting out again, and if I was starting from scratch, I would take that glass half full approach, educate myself. We even used a buyer's agent or a pseudo buyer's agent for our very first property purchase, and they potentially saved us $30,000 from offering too much on our first deal. Now it's up to you whether you want that sounding board and whether you want that advice, or just go out there and take the free information and use it. Without the action, it doesn't matter how much you talk about what's going on in the Australian market or the economy. If you don't buy a property, then you're just holding on to cash and hoping for the best. Now you have to weigh up the risk and reward here, and there is risk in any investment you make, so you need to understand the numbers. And so I guess this is where I close this topic out. I understand the numbers intimately. I'm a chartered accountant by trade. I've worked with numbers for over 10 years. We run the numbers on our entire property portfolio. I do pay for a tax accountant to check our numbers just because I don't want to make any mistakes. And for the couple $1,000s, it's worth the investment for the peace of mind that someone's checked my data and checked my numbers. But all in all, you need to understand the cash flows on any potential deal. And you can download a free property investment calculator from my website at purposeproperty.com.au. So this question was spawned off a video Emily and I made recently while we were on holidays, talking about how we built a $5 million property portfolio and what makes us different from other property investors. So if you're interested in seeing that video and Emily and I breaking down our story and our property investment journey, click this video over here. And if you want to book in a free strategy session with myself, head over to purposeproperty.com.au. Thanks for sticking around. I'll see you in the next one. Peace.